Hi guys, welcome to Gold. Today this video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Friday, there will be so many important economic headers to be released from different countries, from UK, from Australia, from China, from the European Union, and from the United States. We'll be waiting for the PPI month-to-month for July, and the core PPI month-to-month for July, and the PPI year-to-year for July, and the core PPI year-to-year for the month of July. That's all for the economic calendar. We'll be moving now to the numbers. On the last trading session of Thursday, we have had a trading range from 1489 plus to 1509 plus. Numbers are rounded and the market is still opened. Gold spot is expected to print a close price above 1500. The number is rounded and the market is still opened. Gold is trading above in a bull trend above its all daily simple moving averages, and we have the 20 days daily simple moving average about 1438, and the 50 days is inching closer to 1410. We are overbought on the weekly chart with a high reading 83. It could create a correction in the market. The first support is 1489.95, then 1483, and then 1476, and the first resistance 1500, followed by 1510. If taken, the market will go to another channel and will show you 1527 to 30. That's all. We'll go on now to the trading strategy. Today video is a short one. Economic calendar so far this whole week was tight and light, in the sense the markets have traded on most of the time at its own sentiment, which was too much negative, and this helped supporting the prices of gold and silver. I suspect that the US equities will have another round of rough sell-off, which could happen at any time. Now we are approaching the 50 days and 100 days daily simple moving averages, and there is the rational investor versus the fast money. For gold and silver, what I can take from the chart, that markets is doing a very delicate consolidation, and it's likely to be preparing to take off for a new highs. Both gold and silver are in line for a correction. This I said so many times, since both are overbought on the weekly chart, with gold scoring RSI of 83, and both failed to print a higher high on the last trading session. But as you may have noticed, as the prices are going further high and high, we are getting a smaller dip, and I cannot keep telling you wait for a worthy dip. You got to jump in and to add if a worthy dip happened. This is how, because most likely gold will find a way to rally and print a newer high for the last trading session of the week. As long as the markets did not top, I mean silver and gold so far, any dip should be welcomed, and it will be taken by the market as a chance for extra reward to the investments. Market floor is 1450 for gold. No more bloodbaths in the gold market. Central banks around the world stopped selling their inventories of physical gold, looking for higher prices, and believing that the market is steady and is not going to have headwinds. Also, one thing to say, that gold rallied almost 30% so far, outperforming all the stocks markets in the world. And add to that the yield curve is an inch away from creating an inversion, making the 2 years better than the 10 years. Talking about bonds here. That's all for today. Thank you guys for watching. I'll see you tomorrow.